a good demonstration or illustration of when well, the charts aren't going to tell you too much of anything, was on Friday, where Thursday we had a bearish engulfing signal, but stochastics were still heading up. That told us two things could happen the next day. So that eliminated our accurate prospecting of which way the market should go. But it gave us the opportunity to provide an if-then statement. If it headed lower, there was a good prospect that this wedge formation would be forming in the Dow. If it headed higher, tell us the uptrend was still in progress. However, what we saw on Friday morning, was the Dow futures were down quite a bit, which told us they were taking it down. We were probably caught in this wedge formation. However, after Bernanke had been speaking, it became evident the bulls were stepping in and they closed it above the T-line. Now that gave a whole different perspective with a much more definite assessment of which way the market should be going. But they could not close it below the T-line. And if we saw pre-market futures positive on Monday, you want to be buying with a great aggressiveness, with the idea that if they could ever break out above this level, we were now in a double bottom with candlestick signals at the bottoms and making the next target possibly the 200 or the 50. This could be seen more definitively in the NASDAQ, where the NASDAQ opened lower on Friday but came back strong after Bernanke's speech. And today, with the pre-market futures gapping up, very strong, told us there was going to be a strong open in the NASDAQ, which also took us above this recent peak, making the double bottom formation that much more compelling. A positive open tomorrow would still make the 50 and the 200-day moving average your next viable targets. Having the ability to identify which way the trends are moving gives you the opportunity to scan for the stocks that not only are going to go up during an uptrend, but have the prospect of going up the biggest percentage or the stronger price moves during that time frame. We recommended CAVM this morning because in the last few days it had a doji gap up through the T-line, bullish confirmation on Friday, and positive strength showing up immediately today. Told us that if they could break out through this level, this one had an opportunity to go into the 50 or 200-day moving average. The fact that they gapped it up again to go through that level tells us there's a lot of enthusiasm coming into this stock that these targets are very viable. And there's a huge advantage to candlestick analysis in the sense that it tells you what type of investor sentiment is occurring at specific technical levels, such as Thursday we saw a little doji that held up on at the T-line here in soybeans. Friday it opened and started moving positive. Our basic simple rule about candlesticks signals: if it opens positive and trades positive after a doji, it's usually going to move in that direction. With that knowledge, we know that if it broke out through this level, this is going to be a level that everybody else could see. If it breaks through there, there's probably a good run. We've had very good profits in soybeans for the last 2 days of trading based upon this breakout. Even though we were in an overbought condition, everybody could see that it broke out through this trading channel. That'll be it. We'll see you in the chat rooms.